So, good morning, I'm Pam Christensen. I'm the Economic Development Director for Madison Gas and Electric, and I also have the pleasure of serving on the Board of Directors for BioForward. And I'm just going to introduce the panel today, or introduce this session. And Barbara Nelsen, the founder of Nelsen Biomedical, is going to moderate our panel and introduce the speakers. And I'm going to turn it over to her right now. So I have the easy job here. So Barbara, over to you.
Great, thank you very much. And good morning, everyone. This is really the most beautiful setting I've ever actually sat on stage in. So we only have 45 minutes. We're going to try and be really brief around our initial remarks so that we can actually have a very interactive session. Questions will be taken whenever you have a question. We're not waiting for the end because it's trying to engage and give you information that's going to be helpful for you right now. So very briefly, I want to share two things that are relevant to my experience. I hosted a panel a couple of years ago where the question was, how do you build a company in the Midwest? What do you need locally? What can you get from some other place? And it was across different sectors of life science, medical device, biopharma, diagnostics, research tools. It's maybe difficult to look at all the detail here, but I can share it later. But the point is that there were two things that everybody said you needed locally: experienced talent and capital. So today we're going to talk about capital and how you raise money or get money from different sources when you need it and how you use it successfully. A quick view of Wisconsin angel funds, a quick view of research we did on early stage funders, not just your VCs anymore, that there's funding available from a variety of sources, patient advocacy groups, family foundations, et cetera. Those are real funders who have come in to kind of fill that gap of early stage funding. So if you want more information, you can find this article actually on our website, and there's links to lists of funding and capital for early stage companies. Some funds within the Midwest. I'm in Minneapolis. I'm headquartered in Minneapolis with offices in Cambridge, Massachusetts. Lots of organizations that have put money to work in the Midwest. So it's not, I know sometimes we feel like we're alone, but we're not. And our panel today, what we're going to be starting to talk about, basically money matters. So money matters and matters about money. So to my right, Matthew, I can't pronounce your last name.
Cienkus.
Thank you.
Easier to say.
And Alan
Hakimi.
Thank you very much. And we're going to just kick it off right now by saying, Matthew, tell us about Abbott and funding sources available within Abbott.
Sure, thanks. So, as you mentioned, my name is Matt Cienkus. I work in the licensing and mergers and acquisitions group at Abbott. And since the focus today is sources of funding, I thought I would just go through ways that entrepreneurs can be looking for funding from Abbott. If you're not familiar with Abbott, it's a large global healthcare company a couple hours south of here. We're structured really into four groups. There's a nutritional group, a med devices group, a generic pharmaceutical group, and then myself in the diagnostic space. So if you're looking for funding, we also have a ventures arm within the corporate group. So this is close to a traditional venture fund. The difference being we look for things that are very strategic to Abbott, and the exit may be folding into Abbott versus spinning out a company. That group is typically doing like $5 to $7 million investments. We would want like an advisory board seat. We're not looking for a controlling stake or even a voting stake. So that's kind of the first entry point. The next would be something more like a co-development deal. So if a company has a product concept but is looking to get additional R&D funding or funding to get through regulatory approvals, things like that, Abbott might make an investment at that stage, with the goal being that Abbott would have some commercial rights at the end of the process. The third would be something that's closer to a pure commercial agreement, something where we'd be distributing a product that's either on market or very close to being on market. And then really the last one would be a traditional acquisition. And companies can move through those tiers to get through to an acquisition. So there's a lot of different ways to look for money inside of a corporation like Abbott.
Thanks. And before we move on, can we just turn the slides off? Thanks very much. And just turn the lights on. That way we can see people and easier and be able to see when you're thinking, how do I find some more money? So if this can go off and the house lights can go up a little bit, that would be great. And then we'll move over to Alan to talk a little bit about the shift in how they do business.
Well, I'm Alan Hakimi. I'm the CEO and Managing Director of Technomark. Technomark has been around for 30 years. It's a British company. I'm the only one in the US. I'm based in Philadelphia. We basically originally were a venture capital firm in which we invested by writing checks. Our first fund, we invested, I think, in 7 companies, and at the end of the day, 3 medical device, 4 therapeutics. 3 medical device, 2 of them got acquired by Sosei, Japanese life science group. The third one, Rainier, did very well until it sold off all its assets a couple years ago. Of 4 therapeutics, 1 didn't make it out of the first round. Second one got acquired by Takeda. Third one by GSK. Fourth one was Biohealth in Boston. Got acquired by Amgen for $1 billion 2-3 Christmases ago. So we did fairly well on that. We were the lead investor and the founding investor in every one of those programs. We tried continuing raising our second fund, and in 2008 the market crashed, so we got a little creative, and instead of our limited partners being financial institutions and wealthy individuals in the first round, we have a handful of CROs, clinical research organizations around the world, that have agreed to be our investors. And we're set up like one of these CRO gigs, even though we're really not a CRO, in which we co-fund preclinical and clinical programs, anywhere from 30 to 70% of the preclinical or clinical study budget. We've done, I think, 15 deals to date. Of that, we've had 3 exits through large pharma acquisition, and 2 IPOs, one in the UK and one in the US. On the preclinical side, we get involved as early as IND enabling studies, so rat and dog, thanks. Tox, and we go all the way up to phase 3. We just did, I think, the largest deal in the history of Technomark, which was a phase 3 registration study for a European company, in which we put in 45% of the clinical budget. We've done anything from a 50K pilot program all the way to something much larger, so size is not an issue for us. It's more fit. And anything that gets me back in the Midwest, because I'm originally from Detroit, I'd love it. So that's us in a nutshell. I think ask away.
Great. So let's talk about myths of fundraising for a minute. You saw on my slide that people were saying access to capital. Does that mean capital has to be here? And what do you do if you feel like there's not somebody who understands what you're trying to do business-wise? So money, capital, local. I know when I put my slides together, somebody said, well, Minnesota, I mean, we just have so much more money there. Yes and no. If you're a medical device company, that's pretty straightforward. If you're anything else, no, it's very hard to find VC's money there. So,
well, originally being from Detroit, I mean, I'll tell you, Wisconsin, probably Detroit, Michigan, are probably in the same, Midwest. Not too many VCs are running around here writing checks. But I also spent 10 years in Research Triangle Park, North Carolina, which was a really flourishing area. And then a bunch of the VCs actually left, Inter-South in particular, went to the West Coast, and it just dropped everything down. And I'll say this, I think you just have to be creative. I mean, where to start? We personally, and I don't think people have a problem with investing in companies out of a certain area. It's more, what's the company about? I mean, you need to be full-time in. You need to. Who's on your board? I mean, don't treat it like a club, guys. It's get guys, get people that can get you in the door of other VCs, whether it's US, East Coast, West Coast, or internationally, however it is. I mean, you know, you don't need too many technical guys on your board. This is not a buddy system here. It's just, if you need scientific help, put them on your SAB, scientific advisory. Your board is there to open doors for you and advise you strategically on the corporate stuff. At least that's my opinion.
Yeah, I agree. The reason I asked that question too a little bit first is because coming from a big corporation, we don't have a lot of dealings necessarily with local VCs. You know, we'd be more the source of funding. But yeah, the kind of things you're talking about, I think that's true. Again, as the corporation, we can help provide access to some of these things. So, you know, yes, we don't want to see a board that's a buddy system or anything like that. But if you're looking to get access to KOLs, or you're looking for help to get through a regulatory pathway, you know, that's the kind of thing that we can help with.
So who in this room has either raised money or is trying to raise money right now? Yeah. And who in the room found it a pretty straightforward exercise? I think it's very, very hard. It's very, very hard. And it's a full-time job. So if you can't put your efforts on that full-time, how do you leverage your board and your relationships to be able to help you do that? Because I'm on the East Coast half my time, I'll tell you it's hard there too, because there's a lot of competition. So you pick your poison in terms of what's going to make it difficult for you. How many people raising money have tried to do something outside their local geography, like Mass Challenge or being in an accelerator on the coast, someplace where you're actually going to be building relationships with investors in a different location? Yeah. So did you find that useful? I can't hear. So, I mean, there's a lot of different avenues for making sure your story gets improved and your story gets heard by people that either have money or can help you find money.
Well,
go ahead.
I mean, the other side of it, and I'm going to throw a curveball here to Bioforward. I mean, North Carolina's biotech organization, they had a 10-week training session for CEOs. I think that, whether it's 10 weeks or at least 5 weeks or something, teaching newbie CEOs how to be CEOs, I think, is invaluable, because you get a lot of these people coming out of academia, which is where a lot of juice comes from. Okay, a lot of new technology, and that's the way it's supposed to be. But then, how do you transition from either the short white coat or the long white coat to a suit? And that's what it comes down to. And how do you pitch and things like that? And just something like that would be very educational, I think, and very helpful through a tech transfer department or something like that, or through Bioforward for that matter. I bet you people would line up to fill up that 12-seat classroom.
And then I'm going to curve your curve by suggesting that they one-up it in having a competition, and those who win the competition go do the 4-month program on either of the coasts, where they're actually, the business plan gets completed.
Yeah.
They're pitching to all of the big VCs, and sort of getting their name out there.
That's what NC Bio.
And that's not a hard thing
That's
to
what
do.
NC Bio did, actually.
Yeah.
It was just so.
But all this takes money, so I mean, everything with the
Right.
state of Wisconsin, we're sort of just budgeting some cash for
I mean,
that.
I don't know. Let me put it to you this way. I think, I'm sure you could find some person to come in
Yep.
volunteering and,
Yeah, agreed.
such as me or Matt, we're here on a volunteer basis anyway. So, Chicago's not that far away.
It's not that far.
Got a direct flight. I don't have a direct flight, but I connect through Detroit anyway, see my parents. So it might work out. But anyway, so I think it just, that's a big thing. The other thing I think, in listening to the group before, I'm always fascinated with when they come and say, we need $15 million. and I'm thinking you're in mouse studies. What do you need 15 mil for? You know, focus, just tranche it for goodness sakes, because Matt was also, you were mentioning how, you know, you're sexier when you're doing work as opposed to sitting on the shelf when you're behind.
Yeah, well, I think if you can, what's going to be really important to what we want to hear, and it ties a little bit to the qualifications of the CEO, we're going to want to hear a strategic story, and we're going to want to see the whole pathway to market. You know, unfortunately, we see a lot of products, we see a lot of science that they're innovative, it's great, but without a clear path to getting to market, they just kind of fall by the wayside. So being able to tell that whole story, and when we're looking to make an investment, I mean, we want the financials to work, you know, we want to see a TCF ROI, et cetera, but it has to be strategic to what Abbott is looking to do, and it has to have a clear pathway to market. So being able to tell that story is a big deal.
I mean, one of our CEOs, we have a Boston company, and you know, we're finishing up their 1B, and his next phase 2 is going to cost $4 million. And for some reason, he just sent me an email saying, "Yeah, we're trying to raise $20 million," and I don't understand that. He already has $5 million commitment. Why don't you start your phase 2 and just, because again, why stall your program? I mean, let's take it even a step further back. You know, get enough money to just start the rat talks. I mean, just start the rat talks, just to make it through, just enough data to show something that someone will give you cash for the dog talks now. You know, I mean, it's just, you don't have to get $12 million for, you know, day one, and $10, you're not gonna even, no one's gonna even take you seriously when you ask for those numbers. I mean, it's on so many levels, and there's no offense there, there's just a reality that it's just not going to happen. I mean, so you just need to be practical and realistic about what you can do and what do you need and things like that. And it's not a lifestyle company. You need to bootstrap it. I mean, this is the way. This isn't prior to '08 when you take a can of Coke and a Domino's coupon and go public. It just doesn't work that way anymore. It just, you know, it just doesn't work.
So in my work with, we do a lot of due diligence for angels and investors of different stripes, and really, they want to see your financial model based on hitting particular milestones, rather than a burn rate, right? So however you can parse out that you're going to hit the milestone, that's going to give you proof of concept, or it's going to give you some kind of data that makes it more believable or takes out risk. That's really important.
Yeah. And don't fudge your numbers. They're not me, I'm not the smart guy, but there's a bunch of guys behind me that are just so much smarter than me, and they know this stuff. Just come clean. If the juice is good enough, it'll work. You will get funded if the juice is good enough and you have a good plan. And that's just, I've always been raised that way with all my mentors. If the juice is good enough, you will get that funding. And I used to roll my eyes at this, but that funding is the last variable that needs to be there, that needs to take place in a company. It's all the other stuff. Please.
I have a question kind of backing up a little bit about business plan and key personnel. I'm wondering what your experience is. It seems to me like sometimes somebody's got a great concept and maybe don't have all the personnel in place that they need in order to bring it forward. Or I suppose on the flip side, there could be somebody that's got a great team of people that are working together but maybe don't have the business plan or don't have the concept. And based upon your experience, which of these is the most common? And let's say that the situation is there's a great business plan, there's a couple people in place, but there aren't all the people in place that need to be there. You work with the potential potential investment to make that happen, or does that have to be there before you're ready to talk to people?
Barbara, I mean, you've run the show.
I'm going to say that you hate those answers like it depends. If I'm speaking with the VC typical investor voice, I'm going to tell you that I'm investing in the management team. I want to see people who I believe can get the job done, whether the technology is right or wrong, they're going to find a solution and make it work. They will put money in the right team. What do you do if you don't have the entire team? That's fine. Lots of successful companies with a very lean team where they're outsourcing to very, very experienced people the work that needs to get done. That's the right way to do it, right? You don't bring it in-house. You actually place it in the hands of Technomark or somebody else to do the parts that they have experience doing. So how do you fill that gap if it looks like you're missing some, experience done before talent? Put them on your board if you can get them on your board. Guys?
Well, actually, since by the time I'm getting involved or our group's getting involved, it's a little bit later in the stage already. Excuse me. So typically, there will already be a product concept. So for what we would see as the biggest issue really is the path from this product concept to market. So typically, it's a little bit further along before we would be getting involved in making an investment. The biggest issue is, don't fudge the numbers. People can be really overly optimistic about what it's going to take to get through a regulatory pathway, even more overly optimistic about what it's going to take to actually get pricing and reimbursement in place and to get it all the way to commercialization. So for me, maybe you want to answer the management question first, but from what I typically have seen, it's really hard to connect the dots. And he said if the juice is good enough, it's going to get there. I've actually seen a lot of interesting signs, a lot of products that fall down because you can't get that pathway to commercialization.
I mean, for us, I think, again, not to echo what Barbara said, there's a slight scale in there. I mean, I think the biggest thing is, have you been in front of anybody and have they given you feedback, and what has that been? And take that feedback, guys. I mean, they're not just saying it the whole world is not out to bust you, okay? It's just, if four people keep on saying the same thing, either you're not, and according, we've heard this before, you're just not getting it. No, you're not selling it properly, okay? And that's all it is. It's just, we're really not that dumb or angry or upset or, cunning for that matter. So, I think it just, it has to do, each case is different, unfortunately. But I think both of us are going to be upstairs on the second floor lounge after lunch for the next few hours. We're open for individual one-on-ones and to discuss, so anytime.
So, you said something about selling, and I made notes from the last people sitting here about what Michael said. Scandinavians are passive aggressive, and Germans don't talk to each other. And in the Midwest, we don't talk about ourselves very much. And I'm both Scandinavian and German, and from the Midwest. And I have a location in Minnesota, and I have a location in Boston, which for me becomes very challenging because I have to put on a whole different shell when I go to the East Coast. And my shell on the East Coast, I'm very comfortable telling you what's important about me and what I can do for you. And so when you put on your shell, when you're raising money, you're doing a sales call, and any sort of reticence or shyness about what your capabilities and your company's capabilities are have to go away. I don't know how you practice that. I've just had to practice it over time, and sometimes I make a mistake. I go to Boston. I come from Minnesota. I go to Boston. I'm in an elevator, and I say to somebody, "Hey, how's your day going?" And they look at me, and they will not speak back. Right? It's the East Coast. We don't talk to each other in the elevators. Then I know I'm home when I go in the elevator, and it's a bunch of blonde people, and I think, that's right. I'm in Minnesota now. I can actually ask them, "How's your day?" But so, any tips about selling? So we could say, here's what you need to show. How about in terms of just confidence, persuasion?
I guess what I would say is you want to be confident in the story. So I think a lot of things that we have experienced is people aren't sure what they're kind of looking for, frankly. Because this sort of 4 tiers that I started out with are people willing to give up some IP to get someone like Abbott involved. Are you willing to license that technology? Are you willing to give up commercial rights? So I've had experiences where someone will tell a nice product story, and then you ask the question, what are you willing to, to do here? What are you looking for in a relationship is maybe a better way to say it, and they haven't thought that through yet. So thinking how the product get to market, thinking what you really want from a company like Abbott, because we have capabilities and we have funds available, but being able to tell that story and know what you want will be really critical.
I have a couple good anecdotes. I always find it fascinating when I sit in on some of these pitches, and then one of the people around the table interrupts the pitch and asks a question, and the inventor or the pitcher basically goes, "Oh, I'll get to it." No, don't get to it. You've got some guy that's actually interested. You've geared, you've piqued his interest. He's asking a question, and I know it's 4 slides off. Answer his question, because then it'll open up more dialogue. For goodness sake, I'll get to it. I've always found that fascinating. It just, no, I have to follow script. Go with it. It just, you've piqued interest. So,
Engaged, they're interested
yeah.
in the first 30 seconds. That's what I hear. I want to be interested in the first 30 seconds or minute.
Sure.
Yeah.
Yeah. I mean, people obviously have lots of other things they could be doing.
Yeah,
So.
short attention span in the age of apps.
Right.
So, I don't know, when I was in London, I lived there for 5 years prior to moving back to the US, because that's where our headquarters is. Yeah, the British people are just, it's a different beast anyway, but yeah, it's always, come back. If they hit you, just come back and fix it, and then please don't take it personally. I know it is personal because it's your baby and everything like that, and we get it. And plus, everybody's thinking they've invented the next sliced bread. I mean, it's just, sorry, some of you haven't. It's just, but
You know what though, isn't it great? This is the thing that I like about working with young companies. They're passionate and excited. It's nicer than being sometimes, although Abbott is a really terrific company, sometimes when you're in a really big company, nobody's excited
that's true.
about going to work.
Yeah, most of the companies that we invest in, they're all what I call midget companies. I mean, they're easily under 50, maybe even 10. So it's that's our space basically, startup emerging companies. So.
Well, I'm not going to say Abbott, nobody's excited to come to work. Lots of people are excited to come to work. But what I would say is, Abbott, and GE Healthcare was mentioned in an earlier session as well. Yes, you are dealing with a big corporation. So, I keep talking about the story that you go in with. I mean, a company like Abbott is going to be looking for a couple of things. I mentioned I'm in the diagnostic space. So if you come to me with an idea that basically says, this is going to eat your existing business, this is going to cannibalize your existing business, you're going to get my attention. If you have a situation where you're saying, listen, this is a nice add to your existing portfolio, maybe it's even a gap compared to some of your competition, that's going to get my attention. Or if you have something related to that that's saying, listen, this is similar to what you're doing, but it's innovative in space XYZ, it's going to be able to move you a little bit in a new direction, that's going to be interesting. But a big company like Abbott or a big company like GE Healthcare, not to be overly conservative, but it's going to be easier to get a message across if it's related to something that we're already doing. It is harder for a big company to kind of take off the hat and say, talk to me about something that I know very little about. That may be easier than a situation at a small firm or a VC.
I'm going to put you on the spot. I don't know the answer to this, so.
I hope I know the answer.
There you go. But how about if a company comes to you and they are, let's say, too early, other than you telling them, listen, you're too early, what kind of feedback do you give them? And do you at least say, keep us in the loop, or, things like that?
Yeah. So as I started, we do have a ventures group. I'm not in that group, but they can be very flexible. So like I said, the typical investment might be $5 to $7 million, it might be more like Series B or C, but there are times where there's something that is particularly interesting to Abbott's future, just kind of a strategic arc that we have mapped out. And if it's on there, even if it's very early, we'll try to find a way to get involved.
Right.
Or at least we'll say, these are the kind of things we need you to come back with. We can't talk to you necessarily today, but if you get to a product concept, or once you get some data, one back really, if you get some data that you can talk to us about, then it's more likely we can figure out a way to move forward.
Now, that's the exact advice I was going to give too, with one catch. When I was at a company called Novex, it was a pegylation company. We just slapped our peg onto stuff that was coming off patent and made it a new drug and made it better. And so we had an oral calcitonin program, and we were just determined to give this to Novartis. And Novartis told us we need monkey studies, so we went and got monkey studies for it. Novartis told us to make it purple. We made it purple for them. At the end of the day, we did a deal, 130 mil with Elon instead at the time. But, don't get too caught up also. Again, back to the gentleman in the middle here, it's a sliding scale. It's just, you use your own best judgment, however that is, but you can't take everything so literally. If I go get him monkey studies and a purple pill, then he'll come and invest versus, dog studies and it's still orange or something like that.
So questions, I'm looking for burning questions about how do you design your company for an exit or others. How do you discuss that? I was on the phone yesterday with someone, I'm doing due diligence on this company, and I asked him about exits, and he didn't have anything to say. And I said, well, you do realize your investors want to know when they're going to get their money back, and how.
Well, okay, so I have some good experience on that one. We invested in a New Zealand company, and they're now in phase 2. We did all their preclinical work. And the problem with it was they had 63 investors at preclinical stage, which is great. They scrapped it and got them the $50 a head basically to make it get through IND. But the problem is if you bring in anybody big at that point, all those 63 people will just be washed. And obviously not very happy. So you sort of need, I know the previous moderator was telling us how not to pay too much homage to the gods of football and things like that with the Michigan-Wisconsin game coming up this weekend. But you sort of need a salary cap person that helps manage that projection. Because if you go and get money now, how are you going to, from angels, and if you go do at some point a 5 mil round or a 10 mil round, those angels are going to be washed out, and they're going to be mad, and no one's going to, you need to come up, I'm not saying I have the answer, I'm just saying, you need to find somebody that can actually strategize with you 3-4 years out.
I think that's right. You need to have a plan you have to act, just like your business plan, you have to have a funding plan, and it has to make sense throughout the lifetime of where you think you need to get to, and why it's going to make sense for each of those different groups, whether it's your families and friends, and that should always be convertible debt, by the way, to, if it's angels, do they have a big enough ability to take a bite that can get you someplace important? There are angel groups on the coasts that actually will fund companies through an exit. So, I think...
Whatever that exit, let's just...
Right, through being acquired.
Yeah.
No, in a medical device company. So it was like $50 million funded solely through APO funds. So it is
Well, that's
doable.
easy because it's medical device. No offense. It's just, the budget's significantly smaller than a drug. It's just,
But drugs, we don't bring them to, as a small company, we're not going to
You
bring them
flip
to
them
market.
on
We're going to
phase
get them, we're going to get, the company's going to get bought.
Right.
That's the goal.
Yeah, you flip them or you go specialty or whatever it is.
So your goal is trying to raise $50 million.
Right.
This, for medical devices, you almost have to bring it to market.
Yeah.
But we've had situations where we were ready to buy a company. It made sense, you know, we were ready to pull the trigger. And in this particular case, the most recent one, it was a family-started business, and they hadn't thought through the ownership structure. And you had a few people that just, that's not the right price, we're not ready to exit yet. So it can get messy if you don't think about that up front.
Yeah. Challenge is about landmines about, unfortunately, but you know, we don't want to be the glue to do one. We want to actually, what I want to say is there are monies in pockets you may not know about. All you know, there are family funds that we work with that are funding companies to, you know, quite a bit of money.
Right.
The Leukemia Lymphoma Society has really put capital to work for young companies, not just scientific innovation, because they know that there's a gap now in funding. So there's a lot of different kinds of organizations.
Michael J. Fox.
Yeah, government
Yep,
funds,
W.J. Fox.
Clinton,
Yep.
Gates.
Yep.
I mean, there was just
Yep.
a new initiative. I saw $20 million. It was Health and Human Services for like an antimicrobial challenge
Yeah.
in the diagnostic space. And there's
Yeah.
lots of places looking to build companies.
Right, I mean, I would say it's kind of non-VCs now, depending on where you are in your life cycle. It's for young companies. It's big pharma's strategic arm that's investing in things that might be pipeline fillers, just like for the diagnostic side. Yeah.
I mean, no two deals are ever the same also. That's the other thing. I remember prior to me joining Technomark, as I said, I was with Novex, and then I just spun out my own stuff. I had my own little consulting gig for 3 or 4 years, and you know, I remember my cousin, actually, who was an interventional cardiologist on the West Coast. He invented something, and he's like, you know, so-and-so did this deal for X mil. Why don't you go and get me that deal? And it just doesn't work that way. It's just, every variable is very, very different. I mean, I think, and some of it is luck. When I was at Novex, we had an oral insulin program in phase 2A. And for years we were going to SmithKline and Glaxo, okay? And they were both saying no. And then the GSK merger happened. And I can't remember, I think the SK part was bigger than the G part. And they came in and they were appalled that Glaxo didn't come with a diabetes pipeline. And so 4 days later, they were at our door, locked us down into a non-compete and a stay deal. And about half a year later, we did a $283 million deal with GSK, which was top 10 deal of the year in, I believe, 01 or 02. And that was sort of my feather in my cap. But again, it wasn't me. It was pure luck. Okay, and you sometimes need that. I mean, it is what it is. It's fabulous on my resume, believe me, but you know, it's more serendipitous than anything else.
It's hard for me to see out who.
Oh, back there.
Thank you.
Talked earlier about management teams and the importance. A lot of companies must come to you, 2, 3, 10-person teams with passion, having started it. You come in, how do you handle the management before, pre, and post? Do you always, by rule, bring in your own person to be CEO, or do you look at that team? Because I've seen it work both ways. How do you typically handle it?
Barbara, I'm sure it's crossed.
Everybody's looking at me. Well, let me just ask the question back to you. What did you see pre and post? Did you see anything that do you think is typical?
I've seen it where you augment some real business knowledge in a new CEO, and it really helps. But I've also seen that fail miserably because they don't have the chemistry and the passion that the originating team has. So do you educate that team, or do you have to, in some cases, force fit a mismatch with the new leadership?
It's always there's no one answer. I mean, if you have any.
Yeah, I mean, I think that's hard. Typically, what I've seen is the founder is usually in my areas that I work in, which is research tools, diagnostics, therapeutics, and biomanufacturing. The founder is usually a technical scientific expert. And so they stay on as the chief scientific officer or the chief technical officer.
Or chief medical.
Right, and they know, and typically they know that they need someone with a different profile to do, for example, fundraising, because it's not in their wheelhouse of experience, nor do they necessarily want to be out in front of people making a sales call day in and day out. So I think for those founders with that kind of a background, and then trying to marry, the getting along with the CEO, that is hard because they're coming from a different worlds and different languages and different perspectives about the business oftentimes. Yeah.
I guess what I would say, Abbott Ventures is pretty hands-off, so we would never install a CEO. We don't look for even a voting seat on the board. It's very kind of a strategic. We're making little bets here and there. If you get to the point where we're buying the company, we would do something similar to what Alan said. We would want to keep the management team, but if it's not a business person that's running that team, then becomes a chief technology officer or chief medical officer, something like that.
So, under the traditional VC model, yeah, we get a little more involved on those type of decisions, but now, with the fact that we basically co-fund either preclinical or clinical study, and we're doing the work, so it's through us. So, for me, whether they give us a board or not, I can care less, because I'm knee-deep in data already, So, for that's one. And two, I think, at some point, you need to look at your team and go, you could have 10 people, but are they all of the same ilk? And, you need a CFO in there to balance budgets, you need a president, and you need a CEO. Sometimes the president and CEO are the same, but generally the CEO's job, if I remember, I get them all mixed up, but one of them is supposed to raise money and the other one's supposed to run the company.
Yeah, the OO is going to run the company, and the EO is going to go find, they're the PR of the business, right? So.
And then you have all those, technical people, and that make the juice work, basically. But I've seen good situations where they've asked, not us specifically because it's not in our model, but that the biotech company was asked to bring in a new CEO, courtesy of that, as part of funding, and it either floated or just sunk. But the point is, you need to do the deal. I mean, at some point, you having 80% of equity, it's just not realistic. Okay, that's the one asset that you have that's, I'm gonna get shelved for this, but it's expendable. Okay, it's the one variable that you could you can use that's not gonna cost you per se. It's not like money. So the one thing you can, if at the end of the day, I think, I forget the guy's name, but he's at Hatteras Venture Capital in North Carolina. He said, at the end of the day, if you find some other guy that made $5 million off of you and you don't even know who he is, what do you care? It just, you got your gig, you went public, you got bought out, whatever it was. And, it is what it is. You do what you need to do to get the company going. And at the same time, control is a big thing with inventors in general. And I can say it just know who you give. I forget what VC was there that everyone knew. Watch your wallet with those guys, because they'll put in a new CEO, and before you know it, your 55% became 49%. You're out. Basically.
I mean, that's the challenge of being a founder, right? You don't want to. You're fine. I actually have not founded a company except for mine, but you want the company to be successful, but you don't want to be left with nothing. And it does happen, and it's not good practice, right? It's not good